Okay, I promised to record this video. So what I'm going to show you here is I've got my worksheet and you all have access to this Excel file. Here's a blank, well, it's not a blank income statement, but this is the completed income statement. I got to move this up so I can see everything. It's completed statement of equity, balance sheet, and then here's the blank ones right here. And then there's the journal. So I had some people question, like, what do I do? How do I start these? So I'm going to go ahead and I'm going to start them from the income statement. That's where we always start. But what I want you guys to pay attention to is check out this worksheet. You see how everything is, already set up for you. I already have the income statement listed here. These are the accounts that you're going to use. And so you're going to transfer them over into the income statement. And so they're going to look like this. This is going to be your sales. This is going to be your cost of goods sold. Now I do have links in, it's my grandson and my husband, chit chat. I have my sales and my cost of goods sold in here. Notice my worksheet, there's two cells that it is referencing, 38 and 39. And it's referencing over here I-38, which is right here. This is 38 and this is 39. Cost of goods sold and the inventory loss. I'm going to keep the inventory loss separate because that's what I prefer. I think it's appropriate. It is part of cost of goods sold. When you are recording it, eventually it will get categorized with cost of goods sold expenses. So here we go. There is my sales, my cost of goods sold, gross profit. Sales minus cost of goods sold equals my gross profit. Then I come in here and I list my wages, and I have these all listed for you. They're all blank. There's my wages, vacation, all the way down, and you just input all that and you sum them, and they should equal this amount. Now that's our total expenses. This is our net operating income. Our gross profit minus our total expenses equals our operating income. And then we're going to take out the extraordinary items or the comprehensive income and expenses. And I have rent revenue, I have interest revenue, unrealized gain on investments. And then over here, these are marked in negative because they're taking away from the revenue. And there's my total. I just totaled all these up together. And I'm going to add that in there. There's my net income and loss. Now, let's come over here to the statement of equity. Now, I've given you, at least I think I did, I gave you the beginning balances. So you should be able to figure all that out. Now, in the worksheet, when we look at the equity, now always when you're working with any of your financial, you use the adjusted trial balance. So coming over here, I'm looking at my common stock at 750, that's 800, 1500, 647, 500. And why I've got that in here. I had 750. My beginning balance was 500,000. So now it's showing 750. Obviously, there was an increase in my common stock. And when I look over here, come back here, worksheet. I look right here. Paid in capital says 1,500. When I look at my statement of equity, I see 1,250. So we obviously must have had a 250 increase in our paid in capital in excess of par. I'm going to come in here. I'm going to take the income from that income statement. And this is going to be a negative, and that's going to come from my worksheet. Where is my dividends? Right here, my beautiful dividends, 25,000. That's a negative. These stay in the common stock columns, paid in capital in excess of par column. Here's my retained earnings. I'm going to go ahead, add everything, and there's my ending balances. From here, this is my most important piece. That's going to be my new retained earnings balance. I'm going to prepare my balance sheet. Now I can use my worksheet to help me prepare my balance sheet. And again, all this information is right here, all the way to here. But don't use this because that's already reflecting in the change in our retained earnings. Don't use this one because we have to add the net income minus the dividends to have the whole picture. If you use this one, you will not be in balance. And so you just plug those into the balance sheet. And there you go. I'm listing all my current assets. I total them. I list all my fixed assets. I total them. I list my investments, my available for sale securities and my held to maturity securities. There's my total assets. Then I come down here, I list my current liabilities, my long-term liability, add them together. Then all my equity. Now look, that's the new retained earnings balance, 1,492,400. I list that. Add those three and 4,808, 400, boom, boom. It's perfect. And that's what we want to see. Now, going in here and doing the journal is super, super easy. Again, you can go to the worksheet and you can see exactly which items go together and whether they are a debit or a credit. And I know you can't see these right here. This is number 1. So this happens to be, that's retained earnings. This is a revenue, that's a revenue, that's a revenue, that's a revenue. Total all those up together, that gets the first entry going into retained earnings, then total up all my expenses into retained earnings. What's the difference between these two? 869,900. Well, where did I see that? 869,900. 869,900. And then our last entry is to remove the dividends and close those out into retained earnings. And there's our new retained earnings, which balances with that. And that's how you do it. It's really, 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 really easy. I know writing it out takes a lot of time, but when you get some practice, you're going to find it's really easy. So I'm going to go ahead. I'm going to pause this. And I'm going to create a video. This is going to be the video.